All right, good morning, everyone. So, as we get started with today's Tuesday's currency call, what we'll be going through today will be the euro dollar and also the euro pound. We had some movements last night with Powell's um, speech or discussion on the panel at NABE. So we'll go through that as well, a bit of a review of that, the details of that. And also for Traders Club members, remember that we do have a session tonight at 8 p.m. where we'll be going through some shorter term trade ideas and also, any trade reviews or any discussions that you would like to have. Before we get started, as usual, first things first is a disclaimer. Any information shared in this video is not intended to be a trade recommendation. It is solely the opinion and views of me, the speaker. So please remember to do your own analysis prior to entering any trades. So as you all might know, we've got most of you are regulars here. We've got a couple of new people as well. This is recorded, so it will be uploaded onto YouTube as well. So take the chance, watch it over a couple of times. I will be sharing some trade ideas. So, check the levels. If you haven't already, we just found out that some of you have not gone through the educational videos. If you haven't gone through the course videos, it is in one of the playlists as the educational videos. You can go through the items that I think about when I'm looking at any trades. So you get to see my thought process through the trade setups as well. With all that said, let's look at the news. So as I was just telling you about, early this morning at 12:30 a.m., we had Fed Chair Powell speaking. He was speaking at the National Association for Business Economics Annual Economic Policy. I was watching that news event as it happened. It brought about a lot of US dollar strength. I'll tell you why shortly. Right, nothing much else for today, especially for the euro and the euro pound. We have Lagarde speaking at 9:15 p.m. tonight, which will be about the future of money in the euro system. I don't think this will move prices too much. So far, my view of ECB President Christine Lagarde hasn't moved prices too much with her speeches. So I'm not too excited about this news event there. And later into the week with the euro in focus, on Wednesday, we do have the pound CPI. I'll tell you more about that tomorrow. And then we have Fed Chair Powell speaking, Governor Bailey speaking, and the UK annual budget release as well. And then on Thursday, so what your note here is on Thursday, we do have quite a bit of euro news to be released. The French PMI, services PMI number was 55.5, expected a 55. I think this might be a drop, so about a 55 there. Flash PMI manufacturing, 57.2 to a 55.1. Again, a slight drop there. So expect some weakening in the euro dollar into Thursday afternoon. We do have the German flash manufacturing PMI looking to go from a 58.4 to a 55.9, still in the expansionary phase, but slowing down a little bit, together with the services PMI at 55.8, expected to go to a 53.6. So you can see all this PMI numbers, Purchasing Managers Index, is a bit of a front runner of the news of the economic activity, looking like it's slowing down a little bit in the Eurozone there. Could be because of, most likely because of inflation, but also could be because of the uncertainty that's happening in the Eurozone at the moment, the Russia-Ukraine border. And then pay attention, right? So we do have the Swiss franc at 4:30 on Thursday afternoon, GMT +8. Swiss with their policy rates looking to stay at a minus 0.75%. The Swiss National Bank does have that tendency to surprise the markets a little bit. So be a little bit careful there. The correlation between the Swiss franc and the euro dollar is quite close. So we might see some volatility on the Swiss franc, which could translate onto the euro dollar as well. But at this point, unlikely that we're going to see a surprise there from the Swiss National Bank. And then on Friday, not much news as well. Okay, so it should be quite straightforward in terms of the trading front. But looking at the Fed Chair Powell's speech last night or this morning at 12:30 a.m. So this was the whole speech, his introduction about restoring price stability, right? What was the main factor here? It's not so much about labor markets, it's very strong and extremely tight, that's fine. The main focus here is inflation, right? The rise in inflation has been much greater and more persistent than forecasters generally expected. So even this caught the FOMC by a little bit of a surprise. I think one line there was that FOMC members all expected inflation for 2021 to be below 4%, but it came out at 5.5. This was in June 2021. So it came out a lot higher than expected. The main reasons for this extremely high, multi-year high or historic high inflation levels is, according to Powell, because of this supply side frictions, which combined with strong demand has led to this extra high inflationary number. The reason why we saw a big dollar strength was not because of that rise being greater than expected, or not because of that supply side, or the reason behind why inflation was so high. The reason why we saw the dollar strength come into play was because of this line. Let me scroll down, where he said that if we conclude that it is appropriate to move more aggressively by raising the Fed funds rate by more than 25 basis points at a meeting or meetings, we will do so, right? So the expectation from the last meeting was that without the Russia-Ukraine conflict, we were looking at a 50 basis point or likelihood of a 50 basis point increase. But with the conflict happening, with the uncertainty in the euro zone, in the euro borders, it looked like the FOMC took a bit of a safer route, increasing rates by only 0.25 or 25 basis points. At this level now, he's saying that, hey, we could go by more than 25 basis points if required. And actually, during the question and answer section of this speech, the host actually asked, what's stopping you? Is there anything stopping you from a 50 basis point increase? And he just went, no, there's nothing stopping us from a 50 basis point increase. It's not a preset route, they're not predetermining what levels they have to increase rates by. They're going to wait and see, and if they have to be more aggressive, they could raise rates by 50 basis points. And the next FOMC meeting is in May, so that puts the idea that we could see a 50, puts it back into the ballpark where we could see a 50 basis points increase, possibly in May, possibly into the next, if not in May, then into the next other FOMC meetings. So what actually happened here after this or during this speech by Powell was that, let me bring up TradingView again, was that on the DXY, what we actually saw for the dollar was it climbed, right? It became super strong. It went from that 98.20 level, shot up, broke above the 98.45 level, and now tested that 98.73, now tracing back down again. So remember, we were just sharing this yesterday that it had to break above this 98.45 level before we could see 99 there, and then possibly 99.50. I think that with an update of the analysis from yesterday, I think that this is still going to continue. We're going to see continued dollar strength all the way to 99. But I think that it will probably not not be a straight line up there. I think we might see something similar like what happened here on the 11th of March, or the 11th and 12th of March, where we saw that move towards 99, a quick retrace, and then that move back up again. So I think we will see a bit of a zigzag there, possibly might test that 98.45 level again before bouncing back up, but I'm looking for that relatively more straightforward move towards 99. So in general, looking at the dollar strength being applied across the board at this point in time. What has this done? Just doing a quick recap of what happened with what we spoke about yesterday, the Aussie dollar. Aussie dollar, we were talking about both a buy side or a sell side opportunity. What happened was it set at this 74.10 resistance level. Neither trade has been triggered at this point because we have the expectation for dollar to continue getting stronger. I would say that, don't consider the buy side opportunity anymore. Looking for that downside opportunity, same thing. Just a quick recap, looking for a selling opportunity below 7371. Stop loss about 50 pips, take profit level could be 100 or could be about 60 towards the next support of 73 as a round number, right? So it needs to break past that point before we could see further downside. So quite nice there on the Aussie dollar and on the New Zealand dollar, Kiwi dollar. We actually had our trade triggered where it broke below that 6895 level, broke lower at this point now. I think that it can still continue down, but because it is a bit of a counter trend trade, we might see a bit of a bounce, a bit of a take profit scenario here. I was highlighting to our club members that we might look at 6865 as a point of hesitation. If it does break below 6865, then we can see that further downside towards that 6842 support level. So if you haven't got into a trade already on the New Zealand US dollar, then look for it to break below 6865 before looking for a quick trade. If you have and you are riding this trade down, I would say that you could think about moving that stop loss lower, right? You could move it to break even, or you could be watching it a bit more closely. If it does bounce, close off that trade. If it does break lower, then we have a good trade towards that 50 pip take profit level of 6842, right? With that review of the Aussie and the Kiwi dollar, now looking at the Euro dollar, this is where it gets really interesting. I was actually trading the Euro dollar last night, where we were actually selling it down as it broke below this, as it bounced off this 1.1073 resistance level. I wasn't keen to do anything during the afternoons, as it was testing and looking like it had no real direction. But as it bounced off, as that closed below, I was scalping it towards the downside. What to expect at this point for the Euro dollar? Not a lot of news. We do have some PMI numbers to be released on Thursday. We do have the, looks like a dollar strength being applied at this point. I think what we might see for the Euro dollar at this point is a slight bounce back up, right? A slight bounce back up, possibly towards that 1.1015 level. Very small bounce. I don't think it'll come all the way towards 1.1073. I think we might see a small bounce before that turn back down towards the 109.45 level. So what should you be looking for? I think if you're a little bit more aggressive, you could be looking to sell from about this point. Wait for it to bounce up. If it breaks below that 1.10 level, breaks below that round number, then you can look to sell. At this point, stop loss will be a bit of a in-between level. You could be looking at about a 30 pip stop loss, a tight range of about 50 pip take profit, a 1:1.7 risk reward ratio towards the downside for the Euro dollar on H4 time frame. Alternatively, if you want to be a little bit more conservative, I would say no trade for now. Wait till it goes down and it breaks below that support level, breaks below that 1.0945 level, then this is where you could be going for a relatively bigger trade. Below 1.0930, stop loss about 30 pips, take profit at about 90 pips. You're looking at a 1:3 risk reward ratio towards the downside. What this actually means is that you would have to sit there, wait a bit, because you need price to drop about 60 pips before you can look to sell, which could happen quite quickly, because if we did the same thing there, that was just what happened last night over a couple of candles. Well, actually over 12 candles, over 4 candles, which is about 16 hours there. So we could be looking into later tonight or early tomorrow where it breaks below this support level before selling down towards the 7th of March support, recent low points. All right, I don't think that you should put your take profit towards that 1.08 level. Could get there, but you can see that the last few times it came very close and bounced quite significantly. So I would say, at about 90 pips would be a reasonable take profit level. So with that said about the euro dollar on the H4 time frame, expecting a bit of a bounce, wait for it to break lower, break that support before looking to sell down. What I would say for the euro pound is something similar. Euro pound is actually, if I zoom in a little bit, very close to that 8350 support level. The last time it was at this point, we saw it bounce off several times. The thing about euro pound is that even if the euro dollar drops, we need to see the pound dollar drop as well, just so that we can see, if the euro dollar drops, we're likely to see the pound dollar drop as well because of the dollar strength, which could cause that horizontal move or that consolidation for the euro pound because of that conflicting move. What we're looking for here is the euro dollar to drop first, right? For it to break below that 8350 support level, and then possibly push lower with the pound dollar maybe bouncing higher. As we see, the pound dollar has been trending quite nicely. It has dropped overnight, but we see that trend towards the upside for the pound dollar. So at this point right now, no trade on the euro pound. I would actually suggest a scenario where it becomes a 2-trade scenario again. Euro pound, I would say, I always tend to keep a little bit more flexible with the euro pound. I would say let it come down, test at 8350, a buying opportunity, 40 pip take profit level, about a 15 pip stop loss. If it comes down, bounce and back up above at 8358 level, 8360 level, you can look for that 1:2 or about a 1:2 risk reward ratio towards the upside for the euro pound. Alternatively, if it breaks lower from this point, then I would say sell down. If it breaks below that support level, sell down towards the next level here, where we see the last time we spoke about it, it broke past this point very quickly towards that 83 support level and a lot lower as well. So I would say, if it breaks past this 8350 level, again, 40 pip take profit level, a 15 pip stop loss, about a 1:2, 2.5 risk reward ratio towards the downside for the euro pound. But bear in mind, all this comes into play, especially for the euro pound, with the consideration for tomorrow that we do have the pound CPI numbers looking to go from a 5.5 to a 6%. What this could mean, we already saw the Bank of England increasing rates in a very dovish manner. We saw them increase rates, but then we saw the pound weaken as well. This could spur the Bank of England into further rate increases, although they have done this quite consistently already. But if we do see that happen, then we could see some pound strength come into play. This could actually play out quite nicely for the euro pound. All right, so quite short and sharp there. Aussie dollar, still looking at a possible selling opportunity. Kiwi dollar, if you have already jumped into that trade, fantastic. If you have not, then look for it to break slightly lower before selling down again. Euro dollar, a bit of a waiting before selling, or if you're looking to scalp, then you can do shorter term trades in the H1 or even M15 time frame to trade down towards that support level. And then for the euro pound, I would say possibility for both the upside and downside trade or downside trade, but I would say possibly wait for the pound CPI number tomorrow before jumping to any trade on the euro pound. With all that said, we're going into a lot more details, a lot more questions and answers in tonight's session at 8 p.m. GMT +8. So Traders Club members, make sure you join us there. With that, take care, trade safe. Bye for now.